All right, so let's get started here. It is now 10:02 a.m. New York City time, 10:02 p.m. Hong Kong Standard Time, and let's get started here. So my name is Navin Prithyani. I want to begin with telling you guys that I am sorry for not being in day before yesterday. I got caught up with some work and it was an emergency. But we are here today. Thank you for FXStreet for having me here today. Now, before I begin, I just want to get to know all of you guys. How many of you guys have been to my webinars before? Okay, we got some first time here. Okay, and how many guys are new here? First time saw them on YouTube. Okay. Yeah, a lot of the webinars are actually even available on the FXStreet webinar page. I think one of the moderators can probably get you a link for that. But so everything that we do here is recorded and they're available to watch here as well. YouTube veteran. Okay, great. So there's quite a bit of new people in here too. Okay, so one thing I want to let you guys know, what we do here is we don't really I don't really teach in the conventional way where it's like theory after theory after theory after theory and then just making it boring and just nagging and nagging. No, we do more of stuff where we unfold the item. I explain the thing as much as possible in your language, okay? And then we do it practically, okay? Where we actually see it in front of our screens. Because if it's not theory mixed with practical, if it's just one or the other, it's basically nonsense, you know? All right, so let's get involved here. Now, today's topic is pivot points. And you notice that word re-engineered, okay? Okay, great. Well, worst comes worst, I'm sure these are recorded, so you guys can probably watch the recordings just in case you weren't able to get it in. Okay, so with pivot points, what we're taught in the conventional way is to look at pivot points in a specific manner. Now, pivot points, the reasoning of pivot point is nothing but support and resistance. Okay, I love pivot point because it's a mathematical formula. Okay, it's a mathematical formula that adjusts to previous day and it does not move. It's not an indicator. It doesn't move according to intraday price. This is the one thing I like about this. This is the reason why I can only use this indicator. Okay, so that's information number one. Okay, so we have, let me close this chat so it doesn't bother me. So we have a couple of things now. So we have pivot points as support and resistance, and the conventional methods of if you're above the pivot point, pivot line, which is this blue one here, you sell. If it's below it, you buy. Okay, because there's support down here and there's resistance up here. Okay, resistance is the line above usually current price, and support is the line usually below current price. You know, that's how you, if you don't know what support or resistance means, that's what it means. Okay. Now, since we're re-engineering this whole thing and with the recap, I'm gonna teach you in my way. So these are everything I teach you guys here, of course, is my opinion and my style of viewing the markets. So it's not any trading advice or anything like that. So do be familiar with your forex disclaimers. Okay. So in my way, how do I look at pivot points? All these words here, R3, R2, R1, get rid of them. Okay? Just don't even look at them. It doesn't matter at all. Are you an FX engineer? I like to reverse engineer a lot of things. So because if it doesn't make sense to me, I like to open it up and to find out myself what's going on. So, okay. Look at these lines, forget the colors, forget the letters, forget the words. These lines are nothing but walls. Okay? These lines are nothing but walls. These walls are there to potentially stop the market. Some walls do stop it, some walls do not. And we're going to get into why and whatnot. Okay, so let's make these charts bigger so you guys can see them. And I'm going to separate them with days. Okay, these dotted lines are your day separators. This way you know what day is what day. All right, so these are all your lines for 11th of September. These are all your lines for today, 12th of September. Okay, now the concept that I use personally is using 3 days worth of data. So if you're looking at this particular date, 12th of September, you're going to look at 12th of September's information, which is these lines. You're going to also look at 11th of September and 10th of September. Okay, you will look at these 3 days worth of lines. You will not ignore them. Okay? So far so good? Okay, you will not ignore these things. Now why is that? Why do we do that? Now take a look here. Okay? Markets tend to react in particular ways. Now, if you're just looking at your pivot points on a particular date, for example, 6th of September, do you notice why the markets halt here and never reach the support level down here as we're taught to use? It stopped here. Okay? Many people also say the midpoint between these, they call them M1, M2. That I also look at it as nonsense. Okay? It's not the midpoint. It's the actual support coming in from the day before or the day before that. Yes, they're relative, right? See, these lines that you see here, if you want to get into the theoretical method, these lines are the average of the previous day. Okay, support and resistance works because of a level that happened in the past, so it may be significant in the future. That's basically what support and resistance is, right? If price never went there, you'll never have support or resistance. So only information that now that we changed the day doesn't mean we ignore the fact that the previous support and resistance. So I go as far back as a total of 3 days. So the question is, why not 5 days or 3 days? 3 days is more than enough. I think that's quite sufficient. When you go into more days, then you go into really a messy day, a messy movement. Also the reason why is because here you see the market receive support on 5th of September. Earlier, the market didn't halt there. You get what I'm saying? So now if we go beyond this, we're going through all these candles for no reason. So this is the reason why 3 days is sufficient. Okay. All right. I did see some questions here. Sorry, give it a moment here. Okay, you only use this on 1 hour? Yes, because these pivot points are calculated on daily basis. So if you actually do them on the 4 hours, this is how it's going to look. Okay, it's a mess. 1 hour, it's like this. Now, whether you go 1 hour or lower, it's going to still look like this. When you go to 30, the lines are still in the same area. Okay, and if you go down to 15, the lines are still at the same areas. Okay, so I just use 1 hour to get an idea because I want to see all my 3 days in one area. Okay, all right, so going further back. Okay, now where's the circles I drew? Okay. Now, when you look at these pieces of information, when you go for 3 days worth of data, now you see that the market stopped here yesterday or the previous day. Just imagining that this is current day right here. Okay, that's current day. Let me get rid of these circles. Okay, so we see that the markets have come here. Okay, but when the current day market, we went through this first line, we went through the second line, but then we halted here. What's up there? You know, the average person looking at this is like, oh, well, it's a breakout. We should buy. You know, that's a typical mentality. We're just going to buy. Okay? But if you look at this, there is a level of resistance right here that comes in from 3 days ago. Okay? This area here. Okay? And that's what holds the market down. Yeah. It's the high from 3 days ago. Now, why is this line there from 3 days ago? It's the average from the day before. Okay, so these numbers, we don't just ignore them. You know, we want to understand them and see where they're being used and where they can be used. All right. Moving forward, you'll see these things happen all the time. Okay. Halting at the same areas. Okay, now a couple of things. You'll see many times your markets will halt and a tail will go through. Okay, usually the way I do my support and resistance is a little bit different from the conventional way. The conventional way is they use peaks and lower areas. So, for example, this will be considered a support, like that. Okay, I don't really look at that as support. I look at this whole area as support. I take it from the body and I take it all the way down. That to me is support. Okay, you can see there's no bodies coming outside this area. We have tails coming out. That's a good sign. For me, I like these tails. Okay, when I see a body coming out and tails coming out outside, I see massive buy pressure coming in. I see massive buy pressure coming in, and I'm like, that's my support right there. Okay? Same thing goes for the reverse scenario. Okay? Bring it down to the bodies, like that, and all the way up to the tails, like that. And that right there is your resistance area. Okay? And when you see here, it makes sense, right? So I use that entire range. Okay, there are several reasons for this. One, it gives me a clearer understanding of where the price may halt. And two, the price on my chart is different from the prices on your chart, and it's different from the prices on the next person's chart. Why? Because we're trading spot forex. And in spot forex, brokers legally do have the ability to manipulate prices to a certain extent. They're not going to shoot it up 100 pips, but they do have the ability to manipulate prices to a certain extent. This is why I don't like to go down to a smaller time frame. You go down to a smaller time frame, you are driving your car into a wall. And I don't care what the strongest scalper for spot forex tells me. You know, you put them up in front of me, I will tell them sooner or later, I'm going to have to give you some money for food. Okay? So, when we scroll back, let's keep looking at this. So, support and resistance put together with your pivot points. Okay, your pivot points are basically your support resistance because they're just mathematically calculated. Okay? They're quite powerful. They're used every single time. Right here is used. Okay? All right, so I'm going to do a little pop quiz in a little bit so that you guys can see. Okay, this area is used from the previous low over here. This area comes in from here and the area before. So this line right here crosses that. And this line up here crosses that. So you have two levels of strong resistance. That's right above this area. Okay? All right. Okay, so I'm going to start asking you guys questions now. How did they gain by manipulating? That's a whole different topic there. I can tell you really quickly and briefly, but we won't get into it in detail because we need to stick to the topic. A lot of new brokers, also some brokers, what they do is they keep trades in-house. Okay, what does that mean? Okay, what is a broker? He connects your orders to the market. Okay? He's that person that takes it from the left side to the right side. Now, if statistically he knows 95% of the people coming to him are going to lose, he makes 3 pips of commission every time there's a transaction. How can he make more money than that? He can take a risk and match your account, and every time you make a profit, he pays out of his own pocket to you, and if you lose money, he just keeps the losses. This helps a brokerage firm grow rather quickly. Okay. All right. So that's a theoretical way of looking at it. Okay. I'm not naming any brokers. I'm not saying all brokers do this. It's just, and most small brokers, go through this process before becoming big brokers. So, also sometimes they use a percentage. Okay. Like 20% of the accounts go through this, or 10% of the accounts, depending on how much capital they have to resume. Anyways, getting back to topic. Sorry. Okay. So now, how can you use all this information of these 3 days worth of pivots? Can you think of some ways now? Can you guys think of some ways? Now that you have this information of the market's halting here. Okay, all of you guys, 19th August, okay? This is the current day right here. Why did the market halt right there? What is the reason? Strong support from where? Yep, pivots from 3 days before. If you look, this is the current day, this is the day before, and this is the day before that. We're looking at 3 days worth of, pivot lines. And we see this area right there. And this is what held the market in. Okay, it's held it the day before as well. Now, if you combine this together with support and resistance techniques, I go over some support and resistance techniques in some of the older webinars and stuff like that. These things can be quite powerful. Sorry, not popular. Now, one of my favorite things to do is combine this with candlestick patterns. Now, when I say candlestick patterns, I'm not talking about the traditional doji, hammer, shooting stars and haramis and maribuzus and all that stuff. My whole focus is on the candlestick formations around these levels with tails, or if some of you guys know this as hats, and tails on the bottom. Okay, wicks and tails. Okay, or hats and tails. Okay, we referred to them as hats last time. Okay. Now, as the market approaches a certain area, such as this one, it comes down at full speed, and it starts giving you a large candle with a fairly decent-sized tail. That's a 25% tail right there, telling you the downward pressure is there, but it's slowing down. Okay. Now, that right there tells me, okay, I know I'm still going to sell. Yes, forex scale, that's correct. I'm still going to sell, but there is some pressure coming in from buyers. Okay, well, I'm already on this support line here, on this pivot line. Okay, it's not support, it's not resistance, it's a wall. I've already reached this wall. The next candle opens. It goes short, and closes right there, telling you that the next candle didn't even have strength. It didn't even have the momentum to go. Following candle opens, market rises. The candle after that, market continues to rise. We reach this point where we have this very large green candle here with a tail on the bottom. Okay, so now you get to a point where we've switched directions, we're going long, and this candle has a tail on the bottom. And all I see in my mind is, well, there's a resistance here, there's a resistance here, and there's a big long candle, green candle here. It looks like I'm going to reach this area up here. Okay, because I have a big tail on the bottom. So what happens to this? Why does this not reach that area? Why did it not reach that area? In a moment like this, what do you do? Okay, any guesses? We'll give it 10 seconds. Close some lots. It was a downtrend. Yes, Nuno, that's very good. Always understand, where are you going? Okay, if you're going against, well, it is true that the trend is your friend, but I wouldn't agree with that statement really well. Okay, the trend, of course, yes, is your friend, but depends on where in the trend you are. If you're too low in the trend, how can it be your friend? It's going to turn around. Okay, so always understand those concepts. Do you guys remember the previous webinar we did on identifying market directions? You know, we've made it quite big on FXStreet with that video. In fact, we've been voted as the most viewed video for the month of August because of that. Okay. Would you have exited? Sorry, let me see these questions here. Do pivot points work only for ranging market? No. They work for practically all the time, Drew. You can use them all the time. Would you exit after that candle? Okay, here. I wouldn't reach up to this area to begin with. The reason why is I would be more interested in going from here and locking my profit in around here. Why do I exit my trade right there on the smaller circle? Don't think in terms of movement of the candles. Now at this moment, think of this. As we came down here, right, we started losing selling pressure. Okay, we started losing selling pressure. Where did the selling pressure begin? Right here. This is where the big sellers are sitting. Okay, they're sitting right here. This is the reason why they moved. Look at the size of this candle compared to any other candles before it. So as I'm going north, the last thing I want to do is get into these guys face and face with these guys in a downtrend to begin with. Okay. All right, so understanding where the buyers are sitting versus where the sellers are sitting, you know, it makes a big difference. Okay, take a look here. When the markets move up north here, they move up north here. Did they actually stop here? No. Why did they go higher? How could they have gone higher? Well, first piece of information. We stopped here because we have this pivot line right here. It goes all the way up to there, and it does a small retracement. And then it continues back north up to the area where sellers began the movement. And that's where it dies out again. Does that make sense, guys? Okay. The story did not work on 1st of August at 1700 hours. Let's take a look at 1st of August at 1700 hours. Okay. Okay, so you're looking for, at this moment, we've gone beyond the areas below. Okay. We've come to this area. Okay. Why do we use our 3 days worth of pivots? Oh, sorry. There we go. Why do we use 3 days worth of pivots? Yeah, we'll get into that. I'm getting to that right now. The reason why we get into 3 days worth of pivots is because if I'm trying to analyze this area, it comes in because of this area. This area comes in because of the area prior to that. And then when you go prior to that, you're probably too far into the data. But on the bottom here, where's the data to your left? There's no data here. We need to scroll back and see where's that data. Ah, it's right here. 26th of July. First of August. Where does the market halt? So the reason why we use 3 days worth of data is because I would say 90% of the time, all your information is available to you within 3 business days. But there are times when you go beyond the data that is shown in 3 business days, and you need to pull out a data from the past a little bit. And this is that moment right there. Okay, I'll move the cursor slowly. Maybe it's lagging. Okay. Does that answer your question? I forgot the name who asked that, but okay. Let's see. How do we know which pivot will be respected? The day before or 2 days before? Okay, good question. Good question. How do we know which one is going to be respected? Okay. Okay. Let's find out. Who are you up against? You should always know that. Okay. Let's go out here. Okay. Who are you up against? When you have a trend, let's say your trend is like this. It's going down. The markets retrace. Okay. Will this go down further or just a little bit? Okay. Further. Some of you guys, a lot of you guys are saying further. Why further? Almost close to your sellers. Then the second move is going to be something like that, where it's going to have a hard time coming down. Okay. It might even go like that. Does that make sense? Oh, should I repeat that? Did the sound not work? I can repeat that if you guys want. Okay, let me repeat it one more time. When you're looking at a trend, okay, if the trend goes down sharply and it retraces and it starts to go down again, okay, let's say it starts to go down a little bit like that. At that point, you should already know that the sellers are in full control. Why? Because they're in full throttle going downwards, and the buyers that jumped up a little bit, jumped up only a little bit, meaning there's still big sellers coming in. This will move the markets a little bit further. If your buyers come in with just as much money as the sellers did, or even 80% of it, or 90% of it, when you have a deep retracement like that, do you think the sellers still have a move to bring it down another 100 pips? No. Okay, that's when your move becomes a little bit less. Yeah, then you're going down to reach your recent lows.
Okay, you're probably not going to go beyond it. You're going to go down to test your recent low. That's your safest area to exit. Okay, so from my screen that you see, going from 23rd of July to 25th of July, what's the trend? What is the trend here? Okay, market's ranging. Okay, some of you guys saying it's shorting. Okay, or the reason why some of you guys are saying it's shorting is because of this. Okay, or because of this. Is that correct? Or you guys see this channel trend? Now, let me remove this for a moment and let me show you this. Did the sellers have power here? Maybe I'll move it here. Okay, yes, the sellers did have power here. It moved the market down quite a bit, right? But later on, we didn't have a retracement up to here where the sellers continued to show their power and the markets dropped. What happened? We actually went above this area. Yeah, the buyers kept pushing. Buyers ended up with more money. Okay, now we have this dilemma because we're no longer in this trend line that we were assuming we were in. Okay, we've got this kind of thing happening right now. Okay, so the next move down, how far does it go? Does it drop down dramatically till here? No, it has a tough time. Remember, your recent lows are your ideal target for struggling moments. That's how your ranges get into play also. That's how a range market works. Your buyers and sellers are equally competing. That's why the markets bounce up and down to the top side, to the bottom side, to the top side, to the bottom side. Okay? All right. Let me put this chart back on. Whoa. Wrong one. There we go. Okay. So, in this scenario, here we go. In this scenario, do you think the buyers will have power? Well, for what I see is we were sideways this whole time. Over here, we were struggling. You know, we were struggling to go up and down, up and down, up and down, and then suddenly, boom, the buyers broke through. They went free. The buyers ended up with more money. Okay? They ended up with more money. The sellers tried to kick in, and while they're kicking in, what do we see? We see support from the third day. We see support from the current day. We have three levels of support very close to each other. Okay. If we start to see that if the market bounces around this area, do we have a potential to go up to here? Okay. So you already know at this point, not even the market going up there, that if it turns around here, I'm not saying it will turn around. I'm saying if it turns around here, I know where I'm headed. I'm going beyond my recent highs because the way it's retraced only 20%, I've got some buying power. Okay, I haven't retraced 60, 80, 90% where I can only target my recent high to be safe. I have some buying power, and when I go above my recent highs, I know where I'm headed. So then your job, all that your job becomes is whatever strategy you use, your support and resistance, your supply and demand, or candlestick formations, you want to look for all of those things in this area. And once you get them, that's when the trigger is pulled. Okay? All right, we've got like a few minutes left. Let's go over the questions. Some questions we have. Let's see. I'm going to read out the questions out loud, so in case you guys have the same questions. Okay. 30th July, around 1800, there's a candle touching the S3, and yet it continues to go down. Please explain. 30th July. Okay. Okay. One thing you guys need to understand is that just because there's a line there doesn't mean it's going to stop. Okay, these are not ironclad lines, or this is not a permanent wall. Okay, but let's take a look at 30th July and see what exactly you're asking, so we can get an idea. Same chart. Am I looking at the same chart, Mahmoud? Okay. 30th July. There we go. Okay, it touches S2 and it still goes down. Okay, so what do we see here? Okay. Okay, touches S3 and still goes down. What do I see here? First of all, I see a massive downtrend. Okay, up until this point, I see a downtrend. What are my retracements like? Well, over here, my retracement was 20%. Okay. When we went even further, same area, and then we dropped. Once we dropped our retracement, 38%, and then we dropped even further. Our retracement there, we didn't even get a chance to retrace and all that stuff in this downtrend. The market is just way too strong. Okay, so if you're looking to buy in the face of strong sellers, you're going to encounter problems. Okay, but if you're looking to sell together with the sellers at retracement areas, then you're going to be decent. Right here. Here's your support. Here's your resistance level that comes in from the past. And that area helps you. So you can go with the flow. Only if you see the flow has strength. Okay? Hope that answers your question, that one. Okay. Where would you enter on that circle? Oh, Kalisa, sorry, I guess I missed that question when I was drawing a circle earlier. Do you use fibs? Boyki, no, I do not use fibs, but similar concepts. Only problem with fibs is that big question: where do you start and where do you end? Where do you draw your fibs from? That's a big, you'll have 50 different theories on that. So too many theories. I can't find a good one that I can stick to. I couldn't reverse engineer it. I just left it alone. Okay, I came up with some own methods. Maybe I'll do a webinar on that one day. Showing down trend sideways movement. Okay. A zone is stronger, weaker if many big candles are breaking through it. In a way, yes. The reason why we say a zone is strong when a big candle breaks through it, because that is an area of resistance. It's an area for retracements. Sorry, wrong word. Retracements. Okay, when you have a strong move like this, okay, let me draw this for you really quickly. We've got like a 1 more minute left here. When you have a strong drop like this, okay, and you see an area in between it, this just tells you is that somewhere around here is where your retracements are going to be. Because you're going down so strongly, your retracements are not going to be this high. They're going to be lower. Okay, that's why a strong candle and going through a strong a line going through a strong candle from support or resistance indicates that that's where your next retracement level is going to be. Okay, you can watch this on my support and resistance video. It's on the FXStreet.com/webinars under my name. You'll get it. Okay. Yeah, it really helps. It's not just the fact that you use 3 days worth of pivots and that's it. You're gonna start making $1 million by Ferraris left and right. It's the fact you have to, it's the conjunction to use with your strategy. It's not a standalone system. It helps you understand what's going on. Okay, where the markets are gonna stop, where the markets are gonna react. Okay, you consider candles on July 31st. July 31st. Yeah, of course, absolutely, right here. Is that what you're saying? Yeah, you have to consider these candles, right? Because what happened here? At this point, the sellers came in and then the buyers took over. Okay, as the sellers came in and the buyers took over, what happens? We've now switched the trend a little bit. We've gone over the buyers, switched the trend. So when the retracement comes in, does it go beyond this area? No. Area where the big, strong buyers were sitting. That's why on next day, 1st of August, we continue. Okay. All right, guys. We need to wrap it up here. If you guys need any more analysis, we do analysis every day. You guys can look for forex trading analysis on iTunes. We have a free app for you guys, and these analyses are the same ones available on FXStreet that we post, and we've won, I guess, recognition for that over the year of 2012. So, thank you all for attending. We have the next webinar coming up on the end of the month, so stay tuned for that as well. Have a wonderful night. And thank you, FXStreet, for having me here again.